going through everything. And of course, everyone in this session is equal parts teacher and learner. That means you all are experts in your own experience. So what I say might make perfect sense in your world, or I might say something that doesn't really seem like a good fit. That's okay. You are the expert in how this information applies to your own creative career. And of course, we do want to make sure that stories stay within the space. This is being recorded and it will be shared hopefully widely so that everyone can have access to this information. But we want to make sure that stories sort of stay within the space, and individuals that might share their own stories get to retain the rights to share those stories going forward. And of course, everything we talk about is for educational purposes only and not to be used as tax, legal, or accounting advice. So with that in mind, we're talking about money, but more specifically, we want to go over a framework for income and expenses and some of the money stuff you have to think about. We'll go through some metrics to help you build financial wealth in a way that really makes sense for you and your goals. And then we'll apply this because all of this stuff is nuanced and it looks unique for creative careers. So this is the handout I mentioned. This I like to use with clients and students as a quick snapshot of financial wellness. And the way I like to use this is starting way down at the bottom in the middle with your cost to exist as a human, because that's really the foundation and where we want to start. What does it cost you to exist as a human in the way you want to exist? Now, what we need to do with that question is answer a few sub-questions. So who does this number cover? Is it just you? Is it you and a partner? Is it you and a family or others you provide support for? Are there furry friends involved in this number, right? Who is really covered by this? And what personal costs do you have? At the surface, this looks like rent or mortgage and utilities and Wi-Fi and food and clothing and some of those other basic kind of expenses. But when you really start to think about what it costs you to exist as a human in the way you want to exist, I think it's important that you include additional costs in there, like hobbies and travel and self-care, right? This number does not have to be the bare minimum of your costs. I want it to reflect what your real costs are to exist in the way you want to exist. So what I often do is encourage people to write down what they think this number is, and then we check it, right? So maybe you start and say you think it costs you $3,500 to exist as a human every month. And maybe your number is higher or lower than that, right? But once you write it down, then we can go back to the data and check and see. Because oftentimes we're really good at thinking about some basic things, right? The things I mentioned, food, clothing, shelter, right? But sometimes there are extra costs that come up that we see in the data that we may have forgotten when we're writing down our real number. Debt payments are very often forgotten, right? Because for your debt payments, whether we're talking about car payments or student loan payments, or maybe credit card payments, often those are just automatically scheduled and you don't really think of them as a cost to exist, but they're still something you have to pay for every month. We also tend to forget about insurance costs or other costs that come up maybe once a year instead of more regularly. So once we really look at the data, then we can make sure we're covering any of those forgotten annual costs. And then, of course, we forget about irregular costs that come up, sometimes from emergencies, but sometimes just from life happening. Maybe you're in an accident and you have a surprise medical bill, or maybe your car breaks down and you have a repair bill, or maybe your computer breaks and you have to get a new one very quickly, right? We forget about sometimes these irregular costs, but they very regularly come up in life. So it's worthwhile to make sure they're covered within your cost to exist as a human in the way you want to exist. And it's worth noting that this number is just for you. There is no judgment associated with it, right? You don't have to explain what your priorities are to anyone else. This is a number just for you to kind of tuck away and know. And as we think about some of these payments, especially those debt payments, what's really happening here is as you're paying off your debt, what's happening is as you're making those payments each month, if they are more than just interest payments, that's making your overall debt balance go lower. And that's generally considered a good thing. We know there are good debt and bad debt, and debt is sometimes something that is going to be part of your reality. But we do want to think about making sure that debt balance is more or less staying under control. And making regular payments that cover more than just the interest on that debt is a good way to do that. So, key things to focus on. What's the dollar range, the exact amount, or sort of a range to exist as a human? What are you supposed to do with that? Get clear on what your number is, and then check in with it regularly and adjust that number as you see fit, because you will probably need to adjust it over time as your human needs change, maybe as you move. Maybe as we come out of this pandemic situation, there's a lot of data to suggest that people have been spending less money during this period of time. So if you're checking in with your number right now, it might be lower than it will be at this time next year. That's okay. We can explain why that is. And the trick is just to have some awareness and then make sure that what you're spending money on aligns with your values and aligns with what you want your life to look like. After we cover your cost to exist as a human, we move on up in the expense column here in the middle, and we want to know what the costs are to run your creative business in the way you want to run it. And we could spend an entire day talking about getting clarity around what you do and whom you serve and what do you really need to do what you do for those you serve in an effective way. But much like with your personal costs, I encourage people to start by just writing down what they think the number is. And then we can dig into the data and see how close you are. Or if you are in a position where you're finding yourself still kind of figuring out what your costs are, we can do a lot of work around identifying the costs that really are important to make your business successful, right? Sometimes in the arts, we have a tendency to spend as little money as possible, right? We opt for free subscription services instead of paid services, or we try to figure out how to do things in the cheapest possible way. And there's value in that, in being clear on what our priorities are and knowing how to maximize every dollar, if you will. But I think it's also important to acknowledge that it does cost money to run an effective business. So that means having the equipment you need, having the subscriptions you need, attending the events you need to attend, right? All of those things that have dollar costs and time costs associated with them really do add up. And what I want is for all of you to have a clear idea of what that number is. Because once we know what that number is, then we can figure out how to monetize that or how to fund that using a variety of different income sources. But if we're always aiming for a number that's curtailed or too low or on the inexpensive side, we're never going to get an idea of how to really capture the value that lets us run the business in the way we want to run it. Common forgotten costs in this category also tend to be insurance. Many people have creative businesses. They run out of their home studios or home offices, which is fantastic. And sometimes the assumption is that your homeowner's insurance or your renter's insurance will automatically cover everything in the home. That's not necessarily true, especially if you have high dollar equipment or very special lighting or podcasting equipment or other things that might have a high dollar threshold associated with them. It is very possible that a standard homeowner's insurance policy or a standard renter's insurance policy wouldn't cover those things. And that's okay, but that's not something you want to discover after you've lost everything to a flood or a fire or some other sort of tragic event, right? So it's not a bad idea to check in with your insurance costs and make sure you're protected in the way that makes sense for you. And that might mean buying an extra insurance rider, which is a policy on top of a policy, if you will, that might cover a specialized piece of equipment that wouldn't normally be covered. And that's okay. That is part of the cost of running your business and sleeping well at night. We also often forget about networking or marketing type of costs. So much of community building happens for free on social media and through other community channels, but there can also be costs associated with building community, whether it is attending events or traveling to attend events or paying to support organizations hosting free events that you want to go to. And it's okay to include those costs in your budget. And I would argue it's crucial that you include those costs in your budget so that those sort of things aren't something you eliminate for financial reasons. If you are applying for things, whether it's shows or submitting to contests or applying to a table at a convention, there will probably be application fees. Depending on the business entity type you have, you might also have filing fees and these other sort of random things that come up regularly. It's okay. They are part of running a business. But again, we want to make sure we're counting those dollars so that you can effectively fund them. And then the last thing we sometimes forget about when we think about the cost to run your creative business is the cost to reinvest in that business. Do you have a separate bank account for the business? And how much money are you accumulating in that bank account? It's almost like an emergency reserve fund for your business. And that's an important thing to have because you might want to get started on a project before a client has paid a deposit, and you might need some funds to do that. Or you might have a client that doesn't pay you, maybe because their billing cycle is insanely long, or maybe because they just randomly disappear, right? That's okay, but we want to make sure you've got a little bit of cash reinvested in the business so that a situation like that won't really affect you. So, key takeaways for this category: what's the dollar range to run your business in the way you want to run it? What do you do with that number? Check in with it. You may even notice that it fluctuates over time, especially if much of what you do is seasonal or fluctuates with different cycles, right? Like convention season or, production season or a pilot season, depending on what you do. You might notice this number does fluctuate over time. And that's an important thing to pay attention to so that you can take action and know that that's going to be your reality. And what to believe: it's okay to invest in your business. You do not have to run the cheapest possible business. There is value in what you do, and it's okay to get some clarity around what it really costs to run your business in the way you want to run it. Then, as we move on up, we want to look at what you are setting aside and what you are paying in taxes. Now, again, we could spend hours talking about taxes, but if you have a W-2 job, so you are employed by someone else, maybe as an educator, maybe sort of in any sort of production capacity, maybe you have an unrelated job completely to your creativity, your employer is going to be withholding taxes. And generally speaking, it's probably enough to cover your Social Security and Medicare, but also your federal, state, and local income taxes. If you are self-employed, so you are a freelancer, you are selling work directly to businesses or directly to individuals, or you're doing any other sort of hustling type of work where you are managing the income, then you're going to have self-employment taxes plus federal, state, and local income taxes. So it's your job to set aside enough money to make sure you're paying for those. So if you want the quickie takeaway, my advice is usually to set aside about 30% of what you earn as someone who is self-employed. That number tends to be enough to cover self-employment plus federal, state, and local taxes. But if you want to spend some more time honing in on that number, you can definitely dig into your last year's tax return and see what exactly you paid in taxes. And your tax return will tell you that, and it'll tell you how much you paid in total for the year. And you can look to see how much of that was withheld from an employer or how much you may have contributed. Generally speaking, you need to make estimated tax payments each quarter if you think you're going to owe more than $1,000 when you file your tax return. And if most of your income is coming from self-employment or freelance sources, that's not a bad thing to have to do. But many people in the arts still maintain those W-2 jobs in addition to a creative practice. And again, teaching, working in the industry, anything sort of related to your creativity. And you can use your company's infrastructure to help with your tax payments. So let's pretend you are an adjunct instructor and you run your own creative practice and you get some random money from publishing or advertising revenue from a podcast you run or something like that. You can go to the HR person or the payroll person at your W-2 job, the college where you're an adjunct, and share with them that you think you're going to have $5 or $6 extra $1,000 of income, and you can ask them to adjust your withholdings to account for that. So many individuals, especially in the arts, don't even worry about estimated tax payments because they let their W-2 job handle it for them by withholding a little bit extra. And again, using last year's tax return is not a terrible starting point. So what do you need to know? How much you're going to set aside. Again, if you don't want to spend any more time thinking about it, 30% is not a terrible starting point. And then what do you do with that information? Every time you get paid, set aside that much, either in a separate account or sort of mentally keep track of it, or maybe you keep a list or a spreadsheet. Any way of keeping up with it is fine. But what you want is when you file your taxes at the end of the year, if you owe, you want to have the money to be able to pay what you owe. And you are totally capable of managing this process. Sometimes it just takes a few extra shortcuts to be able to do it, but you are totally capable of managing your tax obligations. So then as we keep moving up, we know what it costs you to exist as a human, what it costs you to run your business, what you're setting aside in taxes. Then we think about what you are saving. And sometimes this feels a little confusing because I have this in a column that's called money out, right? But really the money's not going anywhere. It's staying in your savings accounts, whatever those look like. But here's why I include it in this column. What we're doing here is basically building up the total amount you need to earn to enable you to exist as a human, run your business, pay your taxes, and save. Most of the time in the arts, we aim to earn enough to cover our costs to exist as humans and to cover our creative expenses. And then we kind of stop because it's hard to earn money in the arts and it's hard to make the numbers work. But what happens when we do that is we just barely break even every year. So if anything happens, like you have a surprise tax bill, or you have an unexpected medical expense, or you want to drop everything and do a self-funded residency over the summer somewhere, right? If you don't have any extra cushion because you've only made enough to cover your expenses, then we won't necessarily be able to do those things without facing some financial consequences. I want you to be able to do those things, right? So that's why we kind of build up this total number to reframe the amount that we need or want to earn, because we're not going to be able to save money by cutting expenses. Students and clients have heard me complain for a number of years about some of those personal finance articles that tell you to drink fewer lattes as though it's your fault that you're not saving money, which is insane, right? Almost everyone I work with is already living very leanly and making very intentional choices about what they're spending their money on. The solution is not to spend less money. The solution is to make more money by capturing the real value of creativity and by thinking about how we monetize our strengths in new and interesting ways. But before we know how much more we need to make, we need to know kind of what our goal is. And the goal involves covering all of your expenses, but also paying your taxes and making sure you're contributing to your own savings. So that's why we think about all these things and kind of build up the total amount of money out each year, even if money out means it's going to your savings. So let's start with short-term savings. The first thing to think about is how much you should be saving each month or each year, right? So this is the actual amount that you are going to take from whatever you earn and put into some sort of short-term savings or emergency fund. For me, this is very often a savings account or a checking account at your bank. We're not talking about different investment options here or anything like that. We're talking about how much are you basically adding to your cushion on a regular basis. And then the other thing to think about is how big do you want that cushion to be? What is your total goal there? And so for many people, we go back to these total costs to exist as a human and to run your creative business. The goal for what you should have on hand in some sort of short-term savings or emergency fund is probably enough to cover 6 months worth of expenses as a human and as a creative business owner. Now, if that feels totally untenable, start smaller. Aim for 1 month and then 3 months, and then we build up to 6. If you're already at 6 months, I might encourage you to think about what it looks like to save an entire year's worth of expenses. Now, that might feel like it's too much to have sitting on in savings, but if you are someone whose income fluctuates, as many people in the arts are, and if your income relies on uncertain guarantees in the future, especially in a year like this one, we want to make sure you've got enough of a cushion to basically take care of what you need to take care of if something crazy happens. Earlier this year, when everything shut down very abruptly, a whole lot of individuals became eligible for unemployment. The CARES Act extended unemployment benefits to a lot of individuals who wouldn't normally be eligible for it. And that was fantastic because it did provide some immediate relief to a lot of creators. But as we know, it took a minute for that program to roll out and for those dollars to start making their way to the individuals, right? Most of the individuals got the money eventually, but depending on what state you lived in and how complicated your unemployment situation may have been, it could have taken 4, 5, 6 weeks, even longer before you got that money. This is why we have a little cushion or a little savings. It's so that you can still buy groceries and toilet paper and all the other things you need, even while things are a little bit in flux. So aim for 12 months, understanding that it's really hard to get there. So 3 or 6 months is not a bad goal to have in the interim. The last thing to think about is, where are you going to put this money? I mentioned, generally, I like this to kind of sit in a savings account or a checking account. It can be an online savings account because the interest rates are sometimes a little bit higher, but the point of this money isn't for it to earn lots of money for you. The point of this money is to kind of be your safety blanket. It's there just in case you need it. So we want to prioritize having pretty quick access to it, right? For some individuals, that means having some cash on hand, literal cash in their apartments or homes. That's okay too, right? But keeping it in some sort of financial institution or a credit union is not a terrible strategy either. When we think about long-term savings, that's a little different. When we're thinking about long-term savings, we're not thinking about money to fund a quick emergency you might have, or money to get you through a relatively short period of time. We're thinking about much, much longer term goals, like probably retirement. That's where most people start thinking about long-term savings. And when it comes to retirement, very often I hear that people have no interest in ever retiring. And I totally get that. I hope you never stop making work either. But the point of having some sort of cash or some sort of investments to support you in retirement is not that you'll stop making work. It's that you'll have the flexibility to make less if you want to make less, maybe to stop teaching if you want to focus on your creative practice, or maybe it's just that you'll want to take a little bit of a break and still have some income coming in through retirement. That's okay. So questions we want to think about is, how much should you be adding to this each year? And then, are you on track? What's your kind of overall retirement goal? There are 10,000 calculators that you can sort of dig into online if you want to see if you're on track. But what it really comes down to is, a good habit is to try to save 10 to 15% of what you're earning per year and put that towards retirement. If you have one of those W-2 jobs, especially one in education, there's a good chance your employer offers retirement benefits. Now, that might mean they offer you access to a retirement account and you can contribute to it, which is a good thing to do. But if you're a full-time employee, there's a good chance that your institution will also match whatever you contribute to your retirement. Essentially, that's like free money. Now, you do have to make a contribution, but as soon as you make a contribution, if your employer is going to kick in a little bit extra, that immediately amplifies your contribution, which is why we think of it like free money. So if you have access to one of those retirement plans, that's a really good thing to take advantage of. It will lower your taxes in the current year, and it's starting to kind of build that nest egg for you to have freedom down the road. But what if you're self-employed? Turns out there are still some really good options if you are self-employed to save for retirement. And these can be additional options to saving for retirement through your employer. So this doesn't have to be an either or choice. The first one is called an individual retirement account, or an IRA. And individuals can contribute up to about $6,000 or so each year, and you get to reduce that amount from your taxes. So that means if you have a year where you have a little bit of extra cash and your short-term savings is in okay shape, it's not a terrible strategy to take a couple $1,000s and put it into an IRA. The tax benefits are good, and that money is set aside for your future self. If you have additional self-employment income, you can also explore self-employment retirement plans. The most common ones tend to be a SEP, SEP, or a simple plan, SIMPLE. Both of these are IRAs. One works like a pension, one works a little bit more like a 401k, and they're eligible to anyone who has self-employment income. So all that freelance income you had, or those random projects you did, or maybe even some awards or fellowships or residencies you received, if they came with money, often all of that income counts as self-employment income. So if we add that up, subtract all of your business expenses, and if what's left is still a positive number, you can contribute a percentage of that to a special retirement plan that's only available to self-employed people. Now, again, this is complicated and nuanced, and if this makes sense for you because you're maybe looking for some tax deductions this year, or you've got some extra funds and your short-term savings is in an okay place, visit your favorite credit union and ask them to help you set one of these up, because they exist to help and support people. Once you've figured out kind of what the accounts look like, and again, it could be as simple or as complicated as you want it to be, the next thing is to make some investment decisions. And if you have an account through your employer, they are going to ask you to make investment decisions. And you might feel totally unprepared to make those choices. The good news is there's not a whole lot of variability. My favorite strategy when it comes to saving for retirement is to choose something called a target date fund. This is when you basically say, okay, when am I going to retire? And maybe it's 30 years from now. So that would put you in retirement age in the year 2050. You can choose a retirement fund investment account that has a target date of retirement in 2050, and then it will automatically adjust your investments over time so that they start out pretty aggressively while we still have 30 years until retirement. But as you get closer and closer and closer to that retirement point, the investments get safer and safer and safer so that you don't find yourself in a situation where you lose all of your hard saved invested retirement funds right before you need them. So that's a pretty easy way to get started. And then once you get started and pay attention to it over time, you can adjust your investments whenever you want. And that's okay too. I'm talking a lot about retirement because that's typically what we think about when we think about long-term savings, but it doesn't have to only be retirement, right? Maybe you are someone that has already saved what you need to save in your short-term kind of emergency cushion, right? And maybe you've contributed to your retirement plans, but maybe you still have some extra dollars you don't know what to do with. You can have separate investments for those dollars that have the ability to start making you money, right? It's going to be more than the interest on a savings account you might have, but it's also a little bit riskier, right? There's a chance that those invested dollars might disappear. No one can predict with any certainty what is going to happen in the market in the short run, but we do know that over time, markets tend to go up. So don't forget that you do have the opportunity to make some longer term investments as well. And that's okay. You're allowed to do that. Make sure, though, you're covering your immediate short term needs and taking advantage of any tax benefits that come with some retirement savings as well. Because as we know, self-employed individuals pay a ton in taxes. So anything you can do to reduce that burden is probably a good thing. As we're thinking about these savings, the cash you have on hand, plus your retirement, plus any other investments, that nudges us toward this other side of the worksheet where we're looking at your assets, essentially the things you have. Remember, we looked at your debt earlier when we looked at the regular payments you were making over time. Adding to your savings is essentially building up your assets. And the more assets you have, whether we're talking about equipment you own or real estate you own or money you've saved, the better overall positioned you are because you're growing the stuff you have and reducing what you owe over time. And that's essentially what we're talking about when we're talking about building wealth. But the only way to do that is to plan to do that because you're never going to be able to cut your expenses enough to build wealth. So that's why I like focusing on the cost to exist as a human and a maker and your taxes and your savings. Because if we add all of that up, we can really start to make a plan to grow over time. So as we're thinking about your savings, the big takeaways: what is your savings rate? Either what percentage of your income are you saving or how many dollars are you saving on a regular basis? I mentioned 10 to 15% is a good guideline if you're thinking about your long-term savings. I like to see 10% going to short-term savings as well, right? Those start to be kind of big numbers when we're talking about saving 25% of what you're earning in total, especially when we remember that you're setting aside about 30% of what you earn in total for taxes. So all of a sudden, the dollars that are available to actually cover your expenses are about half of what you're earning overall, right? But aiming for that and planning for that is a good way to get there. Once you know what your percentage or dollars goals are, what are you supposed to do with that information? Well, see if you can meet those goals. And some months you might be able to, which is amazing. Other months you might not be able to, and that's okay too. This is not meant to be a punitive sort of exercise where, you're evaluating yourself on a regular basis. You're just setting some goalposts and trying to navigate your way to reaching those goalposts. And if you have to adjust them, that's okay. One of the brilliant things about creative individuals is their ability to adapt and nimbly problem solve. You're just doing that with your financial health as well. What you should believe as part of all of this process is that saving doesn't just magically happen, right? It's part of something that you can do with intention, and it's not going to happen by cutting your expenses. But you're totally capable of planning to save and then capturing the value from your creativity that enables you to do that. So I've touched on this other section, the assets and debt section. Just to kind of recap, some things to think about here is that adding to your savings increases your assets. That's a good thing. Making regular debt payments that covers more than only the interest makes your debt go down. And when we're talking about net worth, we're talking about the difference between the stuff you have and the stuff you owe. And that's essentially captured as the long-term result of some of your short-term choices, right? Net worth is not a measure of your success or your value as a human or anything else in the world other than just what you have and what you owe. And building it over time enables you to have a little bit more breathing room and might make it easier to say yes to projects that you might otherwise have to say no to. So what do you pay attention to here? Basically the amounts in each category. You can have ish numbers here. It doesn't have to be exact. What should you do? Think about making your assets grow up and thinking about making your debt go down. Again, knowing that it's not linear, right? This has been a year where for many individuals, their debt has actually gone up. Why? Because lots of jobs have dried up and expenses have continued to grow, and aid and support has been uncertain at best. So this might be a year when your debt has gone up. That's okay. It's allowed to go up. Your job is to just pay attention to it because you are fully capable of managing this and thinking about it over time. So as we think about all of your total costs, cost to exist as a human, cost to run your creative business, what you're paying in taxes, and what you're contributing to your savings, we add these up and get essentially a total number. But instead of thinking about it as a total cost, I'd like you to think about it as a goal for what you plan to earn. Because my goal for you is that you are earning enough, capturing enough value from your skills and your creativity that you can easily cover your costs as a human and as a business owner, cover your tax obligations, and save for whatever that looks like for you. And that's where we scooch over into this other column here, where we talk about how you earn money. And tomorrow, as part of CXC, we're going to be going into this in way, way more detail, but I do want to touch on some of the highlights here today. This is essentially a portfolio career, which is an opportunity for you to match your strengths with different ways of monetizing those strengths. And I talk about this in terms of having 3 different buckets of ways you earn your money. And within each of these buckets, there are different opportunities to maximize the income. What you should be doing here is thinking about kind of your starring role as being your main thing. And the big challenge there is to set appropriate rates for your work or your time. Now, sometimes you have tons of control over that, and sometimes you don't. But when you do have control over it, it's important that you are clear on what your appropriate rates are, and then adjusting them accordingly, or having conversations with clients about why your rates are what they are, drawing upon your skills and your experience and your expertise to reinforce those rates. Your supporting cast roles are things that are related to your starring role, but not exactly the same thing. For many creative individuals, this involves teaching and writing. Although I do work with a lot of creative individuals that call teaching their starring role and a studio practice a supporting cast role. That's okay. It's your framework. You get to decide what makes sense in each category. But the struggle with supporting cast roles is often balancing your time against the income you might earn from that time, because it's really, really easy to find yourself spending lots of time doing supporting cast roles and not nearly enough time doing your starring role work. So pay attention to that. The third category is your production assistance work. This is the work that is not necessarily related to your starring role at all, but you can draw upon it when you need it. And for a lot of individuals, this is the difference maker between staying in the game and not staying in the game, right? So the challenge here is to be very clear about what you are getting out of this experience, especially if it's not something that's related to your creativity. Maybe you're taking a temp job at a law firm where you're doing administrative work, and what you're getting out of that is access to healthcare. Or maybe you're getting some predictability in your schedule so that you can have some rhythm to your week, right? That's okay. You get to decide what you are getting out of the experience and whether or not it's worth it to you. So that's the portfolio career. There's a question in the chat. Mandy asks, for this column, should you organize it into what pays the most or what you enjoy doing the most? And then Mandy shares that what they most enjoy doing isn't what brings in the most money. Mandy, that's an awesome, awesome question. I would say, it's totally up to you. You get to decide. But if I were deciding, I would define what I want to do most as my starring role, without regard to whether or not it makes money. And then within that starring role, I would get really, really clear on who values it and what it is they're valuing, right? And then it's possible that your starring role might never be the most lucrative aspect of your practice, but that's okay. It doesn't have to be, as long as you're making the numbers work behind the scenes. And you can make the numbers work by taking up supporting cast role work or taking up some production assistance work. And that is perfectly fine. But I would keep the focus in your starring role on what you really want to do, what you see as your core, most important creative purpose. It's also worth noting as well that this is organized with 3 different categories, but when you apply it, it's very possible that you will have a couple of different things that fall within your starring role, or a couple of different things that fall within supporting cast role work, and that's okay. You might also decide that anytime you're doing something related to your creativity, like teaching about it or mentoring others or writing about it, but you're not doing exactly what you want to be doing, you're too drained to pursue your starring role work. So for you, you might decide that you want to have starring role work and then supporting and production assistance work and nothing else. That's okay. This is just a framework for you to use to think about how you want to spend your time and how it might make sense to earn your money. We've got another question from another chat feed. How does considering all of this information change the way we think about how we price our work? And then the follow-up is, what's the balance between hustling for more gigs and pricing higher? I love this question. Pricing strategies is one of the most interesting things to talk about, because there are lots of formulas for how you price your work. 2D artists will often use a linear inch formula. 3D artists will often use time of creation type of things. You can also think about time spent making something and calculate sort of an hourly rate. All of those formulas, I think, are perfectly fine starting points. But when you think about what someone is actually paying for, the value you're delivering, it very rarely is tied to a formula. So when I think about pricing strategies, I like to think about starting with some sort of formula that makes sense for your work, or starting with some insights into your costs. And you've already done that because you know what your costs are to run your business and what your costs are to exist as a human. So you have some insight into your costs. And then I would think about doing some digging into your competitors. So, what are other people charging? How are other people charging it? Because you can get some insights there into how your rates compare to others. And they don't have to be the same. But if they're different, you need to be able to explain why or how they're different. But then I would also think about your customers. Who are you serving with the work, and what are they willing and able to pay? And if you find yourself producing work that people are very willing to pay for, but not able to pay for, that doesn't mean you should stop doing the work. That just means you need to find a different funder. So that's when grants can come into play, or contributions, or maybe subscriptions, where you're essentially capturing the value of people who are able to pay and using that to enable you to provide work to people who are willing to pay, but might not be able to. We see that in arts and education all the time. And we also see that in public art all the time, right? Very regularly, someone who's engaging with a powerful mural, right, might really be willing to support that because of the importance of its message, but they might not be financially able to, which is why businesses, governmental entities, private donors can help support that ability to pay and essentially subsidize the work. So there are different ways of capturing what a customer is willing and able to pay, and then identifying additional, maybe indirect customers that will help support the funding, right? So far in our pricing strategy conversation, we've talked about costs, we've talked about your competitors, and we've talked about your customers, right? The fourth thing to kind of think about as you're setting your rates, and they can be fluid, so as you're thinking about what your rates might be, is your own competencies. What makes you the most special, capable person of doing the work you're doing? Now, if you were educated with the critique model, you might be much better at identifying flaws in your practice or your work than the things that make you really fantastic. So identify the flaws, but then remember all the things that make you fantastic as well. And if you need some help coming up with those competencies, ask some of your best customers, ask your mentors, ask your peers, because they might have some insights into what really makes your work special and unique. And that's the part that you're really capturing with your price, right? Price is informed by costs. But what someone is really paying for is the value of your experience, expertise, perspective, skills, point of view, right? That's the real value. And that's what they're really paying for. So the more you can gain clarity around how you describe that and who you describe it to, because describing it to someone who already values that and is willing to support that and or has the ability to support that will help inform your pricing strategy. As a general rule, I like raising your prices as much as possible before finding additional sources of income. But I've worked with plenty of artists who are deeply opposed to that because they want their work to live at a particular price point that makes it accessible. So for them, they would rather find other sources of income to supplement their work at a price point they decide is accessible. And that's okay too. Personally, though, I like maximizing the value for your work and then making more from other sources if you need to. There's another question that has come through the chat. It seems like we're talking about what we need rather than what we are worth. And the person says, I wonder if Elaine can elaborate on that distinction. For me, worth is kind of tricky because worth is sometimes in the eye of the beholder, right? But I do really like the idea of capturing value through your competencies and capturing that value by identifying various sources of income that can help you meet your earnings goals. goals, right? And those earnings goals would be more than enough to cover everything you need, plus your savings and then some. There's another question here. Are there certain behaviors that might be totally legal, but might flag the interest of the IRS into auditing you? Great and timely question. I will say, as you are thinking about filing and paying your taxes, right, there are some things the IRS considers red flags. And I'm air quoting those because generally speaking, there are guidelines around these red flags, but they are not absolute truths. So one of them is the deduction for business use of your home. So I mentioned earlier, if you have a studio in your home, make sure you've got the appropriate insurance coverage, right? Deducting the costs associated with the business use of your home is totally and completely legal, and you are allowed to do that. But it's captured in its own special spot on Schedule C, which means the IRS immediately has the ability to look at that line very carefully. And if you really dig into that deduction, it is hard to legally meet that deduction. The space in your home has to be used exclusively and regularly for your business use. So if we read that definition literally, as the IRS does, it cannot also be a guest bedroom or your kitchen table or a playroom, right? It has to be exclusively and regularly used for your business purpose. So that tends to be one of those items that if you claim it, it might increase the likelihood that you'll be audited. But that's okay, as long as you are complying with the rules of the deduction and being able to provide the documentation to the IRS if they have any questions. The other thing that tends to catch the attention of the IRS is if you have a business that has losses for multiple years in a row. Now, we know in the arts, it's pretty easy to have a loss in your business, especially if you have a year where you're purchasing equipment or you have a lot of travel expenses, right? It is very easy to have a loss in your business in a creative business. So if you are someone who has regular losses in your business, you want to make sure you are able to share with the IRS that you are in fact running a business. It's just a challenging business to run. So in that case, you would want to save documentation that basically supports the idea that you are in fact running a business. So what things are you applying for? How are you attempting to make money? Are you keeping books and records? Someone who's doing something for fun or as a hobby, they don't track their income or expenses with a hobby, but business owners do approach tracking income and expenses with a little bit more professionalism or polish. So that's not a terrible thing to pay attention to. Again, there is a rebuttable presumption that if you have multiple years of losses, the IRS will question it, but it is rebuttable because you can provide evidence that says, I am in fact running a business. So that's our quick summary, right? So as we look at this snapshot, we want to focus on your cost to exist as a human, cost to run a business, what you set aside to pay in taxes, and what your savings. Because if you get a handle on all of those things, that's what you can really manage on a day-to-day basis. What do we do with that information? Well, we basically think about how we can use that to inform our goals of what we need or want to earn, which turns into a question about capturing the real value of your work that is not necessarily tied to costs. It's informed by costs, but it's not necessarily tied to it explicitly. Thank goodness, right? Because otherwise, anyone who worked with found materials would never make any money from their work. The real value of what you're delivering isn't necessarily tied to the cost. It's tied to all those extra things that you bring to your work. And if you can get a handle on some of these things and know what to pay attention to, what habits to create, like setting aside money for your taxes or regularly contributing to your savings, or even having some awareness about what your costs are, then that increases the amount of control you have over all of this chaotic part of running a business. and that can get you to a place where you have the results you need. So our recap today, we reviewed the framework. The link to that worksheet is posted on the CXC website, and it was in the chat if you're in the Zoom group. We talked about some key metrics to pay attention to, the percentage to set aside for taxes or for your savings. And then we applied the framework to creative careers, because things are fuzzy and delightfully fluid in the arts, which means you can take some existing knowledge and figure out how it can support you and make you work. If there are other questions, I am happy to address them, but we are right at about the end of time. So Anne, I will turn it back over to you.
Thank you, everyone. I'm so happy that you joined us this morning, and thank you, Elaine, for that wonderful presentation. I hope that everyone watching will join us again tomorrow, where Elaine will be back to give another fantastic insight on your business as an artist. And also, we have so much more happening all throughout this weekend, so check out cartooncrossroadscolumbus.org for the entire schedule and to register and see what else we have going on. So we hope to see you at more events. Thanks for joining us.